Hello, everyone. Thank you for joining us for today's episode of Emerging Voices and Emerging Crypto.io podcast, where we will be segmenting blockchain and cryptocurrency thought leaders in emerging markets. I'm your host, John Lira, founder of Emerging Crypto.io, your single go-to source for blockchain and crypto news in emerging markets. Today, we will be speaking with Carl Wegner, CEO of Contour, based in Singapore. If you want to learn more about Contour and how they're using blockchain to transform trade finance and letters of credit, you may go to contour.network. Carl, thank you for joining and welcome to the show.
Thank you. And thank you, John, for inviting me.
Carl, for the uninitiated, what is Contour?
Great question. Contour is a network of banks, corporates, and technology providers that are all working together to make trade finance more secure, more efficient, and using blockchain technology to pull it all together.
Prior to Contour, you had an extensive career in corporate banking as a managing director in China and Taiwan before pivoting into blockchain and eventually joining Contour as its CEO. Where did you work? What areas of banking were you leading? And what was the spark to pivot into blockchain and eventually Contour?
Well, this is not the first time I've left banking. So I left banking once. My banking history has been always in transaction banking, so cash management, payments, trade finance, custody. And I worked at Bank of Boston. I worked at Standard Chartered Bank and Deutsche Bank, mostly in North Asia. So Shanghai twice, Beijing once, Taiwan, Hong Kong, even before the handover. So over 30 years ago, and now I've been in Singapore for a year and a half. But that's the fin part of my career was in those banks. But the tech part, this is my third startup. So I left banking once in 2000 for this technology called the internet. It seems to have stuck, and went to a .com doing trade finance for 7 years. A company called TradeCard became GT Nexus. And then the next time I went back into banking, and the next time I left banking was in 2016 to explore this new technology called blockchain, enterprise blockchain, and help set up R3 in Asia. And R3 is a consortium of 42 banks have invested in it, built an enterprise blockchain platform, ran a lot of projects, POCs with banks. And one of those projects looking at trade finance became the genesis of the Contour company.
So is it safe to say these 42 banks all are part owners in Contour per se? Or birthed out of R3?
No, so the 8 banks in the POC. So some large banks: HSBC, Standard Chartered Bank, ING, BNP, Citibank. So some large global banks, some smaller regional banks, all joined to fund Contour. They were part of the project, and at the end of the project, they tested with corporates, and the corporate said, "This really is good. This is when you're going to build it." And the bank said, "Well, we're really innovation. We did the POC. We did our press release. We're sort of done our KPIs, but the customers pushed them to build it." And so they decided to set up a company and asked me to be employee number 1 and put it together. So they all invested in us in December 2019. December 2019, something happened in Wuhan that we all sort of remember. So we've really started the company as, through COVID. It's been an interesting experience.
For our viewers who may not be as well versed in trade finance, what is trade finance and why is it important to global trade?
So trade finance, there's a couple components of it. So one is the ability, if you're a buyer or seller, you may not have enough money at one time in your bank account to buy your raw materials. So you need to borrow it from a bank as a manufacturer. As a buyer, you want to buy more. It's easier to borrow money from the bank than wait till you get paid and from your, if you're selling in a store and you have to wait till the end of the month to go buy more inventory, that's not great. It's better to borrow from the bank and buy more inventory and sell more. So that's one side, the finance side of it. The other side is actually the trust side. International trade, you have players that don't know each other. And so something like a letter of credit, which is a very base product of trade finance, is where you have a trust deficit between buyer and seller. Buyer wants to buy something from someone who's not 100% sure they're going to ship it. So they say, I don't want to pay for it unless I'm sure they're shipping what I want. And the seller says, if I put it on a boat and it's going to the buyer, what happens if I don't get paid? So they use their banks as intermediaries. So both sides use their banks, and there's a format. It's under a UCP. So there's a global standard where a buyer says, this is the terms and agreement that I want to, if the goods come in this way, I promise to pay for them. And in fact, I don't promise, my bank promises to pay for me. So the seller says, I'm willing to let go of those goods because my bank will go claim from his bank. And so therefore it manages that trust deficit. And so something like a letter of credit manages the opportunity for financing for buyer and seller, but also manage that trust deficit when you're shipping across the world. Now, this often happens with either emerging markets or with large dollar transactions. Two large companies may work with each other, they may trust each other, but if it's 10 or $20 million, it's better to have some paperwork behind it, not just a handshake. And they may want to finance that $20 million for a few weeks. So that's when trade finance and letters of credit come in.
Despite the technological advancements in financial infrastructure to move money between people and enterprises cross-border, trade finance operations still have room for technological innovation. What are the operational challenges associated with trade finance that impact global trade, speed, and cost? And how is technology like blockchain or distributed ledgers a potential solution to improve trade finance and the movement of goods around the world?
Yeah, I divided in a couple things. So a couple phases. One, paper is a great standard. Everyone understands paper. Regulators understand paper. Buyers and sellers and banks understand paper. So that's the standard data set that people have been using for something like international trade. It works fine. It's worked fine for hundreds of years. Digitization of trade is where, why are we sending pieces of paper when we could either send structured data from an ERP system or PDF a document and scan it and send it. And if it could be received instantaneously or within minutes rather than a week from a DHL envelope, then what are we doing still sending paper? And so you're absolutely right. Trade has a longer journey. Payments have moved, fairly quickly, but trade, because there's a lot of documentation that needs to be, it could be customs certificates, it could be inspection certificates, it could be phyto certificates and medical certificate. All these different pieces of paper come from different sources. And so the easiest way is to put them in a stack of paper 50, 60 pages big, and then mail it to the next to the next user. Digitalization is an opportunity to make that much quicker. I sit here in Singapore, I can look out of my balcony and see Indonesia. A shipload of oil can get to Indonesia in an hour, right? It's right across, I can see it, but the documentation may take a week. So that ship has to wait there a week until that paper gets mailed, right? Why shouldn't it be instantaneous? So especially with COVID, companies realize that counting on paper is a challenge, especially when people can't get in the office to receive the paper. Now, looking at blockchain or DLT is an opportunity to manage data and this data that's moving from country to country in a way that allows the world has changed, the geopolitical world has changed. Data privacy, data residency is becoming more and more important to many countries. So a centralized data system where, for instance, SWIFT is the global payment system, it's based in Brussels. I don't think it started 50 years ago in the 70s, right? I don't think now any country would say, whether the US or China or India or many other countries would say, oh, we're going to have all our centralized data in one centralized database in one country. In the EU. EU might be okay, but the rest of the countries might have a challenge. So using DLT, and that's not specifically blockchain, but DLT as we do in R3 Corda, is an opportunity to manage databases to fulfill the data residency requirements in every country. So on our system, we're a SaaS model. Most customers allow us to host their data in Microsoft Azure in multiple locations. But if a company or a bank has to host the data behind their firewalls, we have that optionality, and DLT offers us that optionality so we can be a global system. We're now operational we have 18 banks and operational in 51 countries, and that's because DLT allows the regulators to approve the management of data on a system like ours.
And let's talk about how Contour is solving these legacy trade finance issues, or specifically with letters of credit and distributed ledger technology. What is Contour's value proposition to importers, exporters, and banks?
Yeah, so right now there's in a letter of credit, you have two corporates and two banks. So buyer, seller, buyer's bank, seller's bank. They're all moving data in different ways. So a buyer and seller are talking by email, phone, WhatsApp, whatever it is. The buyer and seller and their banks may be using paper. They may be using electronic banking. They may be using emails. And the banks themselves are using SWIFT as a communication channel between the two of them. That's 4 different ways of communication, which means they're not in sync. No one knows what anyone else is doing. So what Contour we've done, we've built on DLT a workflow and an opportunity for corporates and banks to be members on the ecosystem to exchange data. And because they're all in one system, everyone can see what's happening all the time. So before, you didn't know where the LC was until that DHL package arrived at your counters, and then you opened it up. Now you can see, oh, it's sitting with Bank A, or this amendment hasn't been cleared yet. Someone else has to approve it. So the fact putting everyone on one system allows more transparency, and the process is 90% quicker. So issuance of an LC can happen instead of a week, it's a couple hours. An amendment takes 7 to 10 days. I mean, one of our customers said 7 to 10 days and 16 phone calls now can be done in a couple hours, right? Presentation of documents when you want to get paid can happen same day. Now, maybe it's the next day because you're in different time zones, but we're not talking about putting together the documents, going to the DHL office, mailing it, waiting for it to arrive. So Contour's value prop for buyers and sellers is a streamlined process. Their working capital efficiency can be much improved. Normally on an LC, say it's a 30-day LC. You have a week in front and a week in back, so it becomes 6 weeks to process that transaction. That means only 8 times a year you get to process that transaction. If you could take away the week in front and week in back, all of a sudden you can do that same transaction 11 or 12 times a year. That's almost 50% more goods you could buy or sell with that same credit line with a bank. And so the buyers and sellers see this tremendous opportunity to be more efficient. There's less confusion. For the banks, we're helping them on their digitalization journey because their goal is to get rid of the paper and bring more data in a digital format. And so we're helping them on that journey.
One of Contour's benefits that is marketed is the offer of decentralization. In the world of blockchain and cryptocurrencies, decentralization is generally defined and cited as the removal of an intermediary or central authority. How does Contour define decentralization as part of its product offering, and why is decentralization important to what Contour is doing?
Yeah, so we are DLT now. We're based on the R3 Corda DLT, which is not blockchain in the technical sense. We're not a broadcast method into a public blockchain. We're a permissioned blockchain, permission system, and we're allowing the databases to sync just the data that's related to that transaction that they share. So we're a specific DLT, and that broadcast mechanism, that public blockchain, it could be good for some businesses, but or some use cases. But for global trade, where the prices of the goods, where the banks privacy issues, GDPR and all that, a public blockchain is a lot more challenging for financial services, especially for global trade. So that's where something like R3's Corda has been built by R3, which is owned by the banks, to build something that fits financial services a little bit better. There are obviously some, it's permission blockchain. It's not, we do have there is a set of rules in Contour that manage the membership and who are good members and good players. And if they're not, they can be exited from the system. But as we on Contour, we actually don't know what's going on between the players. Once they're a participant on the system, in the ecosystem, they can talk to anyone else on the system, again, using the workflows that we've built. But we don't know the data. We don't know if that transaction was $10 million or $10,000. And the banks and the corporates and the regulators like that, because we're a communications protocol that's safe, structured, that allows them to move that information in a much more transparent, quick format.
As we've just discussed, Contour presently is just focused on one pillar of trade finance, the letter of credit. However, as you mentioned, there are many other processes and services that make up the trade finance ecosystem to move goods around the world. For those that haven't heard you speak before, Carl, you've talked about expanding Contour's existing partnerships with other providers who offer a different service and already have an established network that may overlap with Contour's network to provide a seamless customer experience that also tackles other areas of trade finance, such as electronic transport documents that are located and operate on a different platform. A multi-part question, Carl. What are some of Contour's ideas to expand its product offerings to other areas of trade finance? And does that include expanding Contour's product set in-house? And if so, what kind of products? If partnership continues to be the preferred strategy, what other areas of trade finance would Contour like to expand in? And who are some of the players in these areas? Or are mergers and acquisitions part of Contour's future as the strategy to expand its product offering and network of banks and corporates?
Okay, that's a lot of questions, but let me try to take piece by piece. So trade finance is what we're managing. So we're managing the flow of information that allows banks to work with corporates to finance, guarantee, or move money. But trade finance is just one part of global trade. And we're never going to be an expert in shipping, in bunker monitoring, in ESG monitoring. Is it a green transaction? Sanctions checking, KYC. There's a lot of other components, booking a container. There's a lot of other areas of expertise that we're never going to be that good at, and we don't want to be. So partnership is a key component to how we can give that, as you mentioned, that seamless experience to our customers. So we have over 100 partners talking to us right now. We're actually only working with about 15 or 20, and that's where we have an overlap with a customer, whether it's a corporate or a bank that says, I use Contour, I use this system. There's 5 or 10 fields that I'd like you guys to update to each other, so I don't have to rekey them in. Absolutely, using APIs, we can connect them, and we're happy to do that where there's a customer in the center, the customer nexus. If there's not a customer nexus, we're not focusing on that right now because we want to focus on our existing customer base and building our network. Now, on the product side, for trade finance products, yes, we look at adding other products into our network and building it ourselves. But our mindset at the beginning was not to try to build everything and build nothing. Amazon didn't start with Kindles and fashion. They started with something everyone understood, a book, 2 SKUs, hardback, paperback, right? And built a network where letters of credit have been around for 400 years. the legal framework of letters of credit is something that we're using that standard. It's been around since 2003 for digital letters of credit. So we're using that same legal framework everyone understands and making that process much better. We're building the network. As we build the network, we'll add other products. How we choose other products, it really depends on the participants in our network. What would they like us to build next? There's a lot of sometimes push, you need to build this. Okay, well, how many people are going to use it? Well, I'm not going to use it, but it really be neat to have that. Well, we're a small company. We can't build everything. We have to prioritize. So we've been looking at other services, whether it's standby LCs, guarantees, open account, other services. Absolutely. You know, as our network grows and our participants help us prioritize what to build next. Your last part of the question was consolidation in the industry. It's already happening. We've seen, I think there's not a lot of growth of new blockchain trade finance companies at the moment, especially with maybe the crypto winter at the moment. But I mean, even a lot was started in sort of 2016, 2017. Some of them have closed down already. Some I think didn't have proper business models. And there's been some criticism in the press. Oh, it's built on blockchain. It doesn't work because it's blockchain. It's nothing to do with blockchain. It's to do with the business model didn't make sense. It doesn't matter what technology you have it on, right? Blockchain, if blockchain is going to be successful, we said this back at our 3 days, when blockchain is successful, no one's talking about blockchain. When you look up something on the internet, you think, wow, HTML is wonderful, right? You don't care, right? You care about the service. The technology is a way to provide that service. So we have also already started some acquisitions of some assets of other companies that have gone into liquidation. And there's a company that the 𝐄𝐦𝐞𝐬𝐬. We bought some of their IP and their assets, and we see it as an opportunity to obtain the IP, the legal framework, the legal rule book. It's not something we're going to build on right away. We're going to wait for our customers to ask us for it. But buying those assets helps us speed our development process in the future. Especially, there's a lot of costs that goes into the technology side is expensive, especially with DLT, but the legal side is also very expensive when you're talking about trying to build a product that's global. How do you build something that's acceptable to regulators in every country? So if someone has already gone through that hardship, we saw that as an opportunity to buy some of the assets for the future. So I think there is going to be consolidation. It doesn't mean there's only going to be one company. I think there's going to be multiple companies with different areas of expertise. Now, whether someone has more expertise on maybe a trade finance and shipping side, someone could be trade finance and KYC or just trade finance. There's going to be different overlaps, and looking forward to working with sort of the winners to overlap and then provide that overall service to corporates and banks.
Moving on to financial inclusion in emerging markets. Because of the high cost of know your customer compliance and overhead, banks generally are providing trade finance services to medium and large corporates that have larger dollar transactions and trade finance services needs, resulting in the exclusion of smaller businesses and banks around the world, especially in emerging markets. Earlier this year, Contour's Chief Product Officer, Joshua Croker, published in Contour's blog that the company's next phase is tokenizing digital assets and using Contour's existing platform to support a decentralized digital asset marketplace. Carl, what does this vision look like? What kind of assets are we tokenizing? And how is this going to help small to medium-sized businesses and banks in emerging markets?
Okay, so let's go back to your first part of the question, right? And you're absolutely right. Banks, the cost to serve for trade finance products has a base case, and it doesn't make sense to do it for very small transactions. And that's one of the things we're solving in Contour, is bringing down that cost to serve so that banks can say a smaller, an SME, MSME transaction, it's still worth it to do. And we've also on ourselves built up on top of the original platform an ability to scale, so we can also offer a low-cost model for SMEs. So that's something we built because we realize that trade finance is not just big and big, it's big and small. And most of the platforms that have been built, whether on blockchain or non-blockchain, over the past 20 years, have only catered to the top 100, 200, maybe 500 customers in the world. No one else uses them because they weren't scalable to SMEs. So I think we've conquered that by offering an SME product, because we need, for Contra, we want the buyers and sellers both on the platform. Now, tokenization of digital trade assets is something that's quite interesting, and it's, you know, hits a lot of the buzzwords that people are excited about. We see that as an opportunity. We are actually, you know, managing trade assets. We are digitizing them. Is that an opportunity to tokenize them and distribute them between banks to other parties that might want to buy those assets? Absolutely, it's a great opportunity. Where that might help the SMEs is where banks, lower cost to serve means that banks will do more transactions at a lower cost. But as soon as you digitize it, tokenize it, automate it, you can potentially group up, aggregate these assets and sell them as an asset class. And this is, you know, what's been done in real estate. It's done in other businesses, and it hasn't really done trade finance because the cost of managing those paper stacks wasn't worth it. So very often distribution of assets only happens when the asset is over $5 million. Well, how many transactions are $5 million? Quite a lot, but there's a lot more that are $1 million, $500,000, 50,000. So we see the ability to digitize them is an opportunity to aggregate, to help build a bigger pie for all to share. And that could be banks, it could be alternate service providers, but it's a great opportunity to expand that universe.
That's a very interesting big picture use case. Is what's in the pipeline to see something in production, or what's the latest proof of concept that you're trying to prove?
So we've done, we have an innovation lab, and so we've already mocked this up for that. We're looking at our ecosystem to tell us when to start it. So we see, again, it's one of those things, we don't want to build something and the old adage of you build it, they'll come, not necessarily in software, right? You have to build something that they want, that the customers want. So it's something we've been looking at it when our corporates, when our banks tell us that's the time to bring that to market. Looking forward to doing it. We've done a lot of the background work already. And it's a tremendous opportunity. Anytime you can digitize paper, it's an opportunity to make things more efficient, aggregate it, and do things you never could do when it was paper. The example, 20 years ago, I was working for a company on that we worked with an importer, and that importer imported a lot of winter coats into the US from Asia, all over Asia. And coats are dutyable. You have to pay duty on them. Hangers are not, they're duty free. Well, by automating again, you could never do this on paper, but in a container, it had 5,000 coats. If you had the system automatically write a script for a customs invoice per hanger, then you aggregated that, and then you can actually save a lot of money. That company saved $1 million in import fees because they now had a custom invoice for every hanger. That's the power of digitizing that previous paper. You could never have thought the cost of manually doing that before would have made it impossible. But it's bits and bytes, digitizing. There's a lot of things, and this is opportunity for, as well, the banks to offer more products, or other providers to offer more products once you have this verified digital data and the milestones in a trade transaction.
given that this platform is meant to focus more down market, so to speak, on smaller, medium-sized enterprises, how does Contour define small and medium-sized enterprises who would be a fit for this marketplace from both a geography and top-line revenue perspective?
Yeah, so we're available in 51 countries, so we're covering a lot of developing markets, and those developing markets are the ones that use LCs more than others. So we're eager to continue to build in China, in Bangladesh, in Vietnam, looking at Turkey, these emerging markets where there's a lot of SMEs that need help. Our service is web-based, so the minimum a customer needs is a web browser to use us. So the barrier to entry is pretty low. If they don't have the internet, sorry, we can't help them. And I know that internet is not ubiquitous throughout the whole world. That's another debate. But if you're a company, you probably have access to the internet. The web browser works perfectly fine. If you're a customer that does 1-2 transactions a month, there's plenty of value of signing up and using that web browser to communicate with your banks and your counterparties in a much more seamless fashion.
Well, we're just about at time, Carl. For closing thoughts, as we've discussed, trade finance in general is a terminology that encompasses a lot of different players in an ecosystem with their own unique roles, responsibilities, and processes that are interconnected for the movement of goods around the world. Similar to the way Contour is innovating with letters of credit by using distributed ledgers to create an ecosystem and digitize the letter of credit process end to end, what do you think and where will future tech innovation be in trade finance, and how much will distributed ledgers or blockchain be a part of that future?
Again, how much? I think as long as you're moving data cross-border, the data residency requirements are going to get harder and harder. So I think DLT is a tremendous tool to be able to fulfill those data residency requirements that the regulators are asking for. So I think it's not the only, you don't have to use it all the time. Sometimes you don't. Sometimes central database, it's a lot cheaper to manage, a lot easier to upgrade, right, than a distributed ledger system. But sometimes the regulations, you need that. I think there's a lot more that can be done once there's a larger data set. Once you start bringing in milestones of the steps in a trade transaction, right? When did if a brand wants to buy from a factory in Bangladesh or Vietnam, they send an order there, then they have to buy the raw materials. If you could have the data that those raw materials were actually purchased and they're the ones that Nike required, then what's the risk? The risk has gone down. If they've done 50% of their production line for that container, the risk goes down again. There's all these milestones in transactions. Now, some of this could be coming from IoT devices, other platforms. There's a lot of different data points that will be available in the future for banks and other finance and other risk providers, could be insurance companies, to be able to offer new services. So it's a huge opportunity. I think that the key thing is finding a market need and building for that, not trying to build everything at once and focus. I mean, a startup never starves for things to do, right? It drowns by trying to do too much, right? So focus on your area of expertise and look for partnerships, because no one's gonna be able to do it alone.
Carl, thank you very much for being a guest on the show and sharing your insights and perspectives. If you want to learn more about Contour's services and get in touch with them, you may go to contour.network. That does it for today's episode of Emerging Voices and emergingcrypto.io podcast. I'm John Lira. Thank you for tuning in, and we'll see you next time. Hey guys, thank you for watching and supporting independent media. Before you go, we'd really appreciate it if you would please like, subscribe, and share the video. It really helps our reach so we can keep making great content for you. Cheers.